Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, overnight and even early this morning, the Australian dollar continues to challenge the 65-cent level, seen as a pause, not as a technical point, as the market, since the break of 65.90, still has further exposure to the downside, which could take us towards the region of 63 cents, or around 63 to 63 and a half. With the upside view still limited due to the fact we've got two negative candles and also two weak positive candles, the downside risk still remains. Therefore, any upside attempts should be limited around 65.45 to around 65.70. Moving on to the euro, we took a stab at the downside of 107, but didn't close beneath there. However, there's still threat to the downside as the dollar index, which measures the greenback strength against a basket of six major currencies, still remains on course after surging through 104, and it hovers there now and could see a rise up to 105 to 106. Although the main event this week is the US non-farm payrolls, we should still monitor the coming releases, which are the US Chicago PMI, the US JOLTS jobs opening, US ADP employment, and also the US ISM manufacturing PMI. Although the main event will be on the non-farm payrolls data, overnight the US consumer confidence declined in May to 102.3, below the April's 103.7. So as I mentioned, the bears are likely to pressure this level, and a close beneath 107 would expose the region down towards the area of 105.45 to around 105.80. Upside attempts likely to remain limited, with the level seen around 107.65 and firmer above at 108 figure 15. Although the bulls have tapped on the brakes, some profit taking has increased. However, I do feel the market may actually find renewed demand around the 139.65 area. If so, then overall the view is still very much to that top side around 141 to 142. Sterling also rebound overnight as the market still digests the recent inflation data and also puts further pressure on the Bank of England to maybe hike rates in its next coming meeting. However, looking at the pattern though, it still remains somewhat weak, and therefore resistance around 124.15 may hold, and therefore look down towards 123.65 with the key base at 122.90 to about 122.95. Wrapping up with gold and oil, the market rebounded again in close to that key level, which was seen around 1,928 to 33. From the rebound, though, the market is still somewhat weak and therefore could see another down challenge. A break beneath 1,928 to 33 area would give us further exposure to the region of 1,870. I still feel that gold is a little bit overvalued and therefore could see this downward challenge. Any upside attempts should be locked around that resistance cap at 1,965 to 66. And wrapping up with oil, the market rejected that topside challenge around $74 and plummeted back to the key support level of 69.5 and pressures there. If we do see a break beneath here, that would give a further extension to the downside, so somewhere to 66.70.85. However, let's see if the market can stage a rebound. There is a little bit of mixed uncertainty in the market, being with the debt ceiling deadline and also with the upcoming OPEC meeting on June the 4th. That's a wrap for today. Thank you very much for joining me. As always, look out for the intro report. I hope you enjoy the great start to the day.